yesterday. For an early look at what we can expect from the local market today, we are joined by Chris Weston from IG in Melbourne. Chris, some dark days in Boston and some massive risk-off moves in the market in response. Take us through what you've been watching this morning.
Yeah, I mean, obviously, I think markets. It was worth noting that markets were in free fall going into the bombings and the various reports that we heard there. So, I mean, that certainly took away from sentiment, but it wasn't the sort of be end and end all. You know, the US markets did fall after hours as well, but I mean, it was really, if you wanted a safe haven, you looked at the yen last night. Some of the moves that we saw in the currency markets, Kiwi yen down about 4%, Aussie yen down around about 3.8%. Clearly, the carry trade was unwound in a massive vicious move that we saw. Of course, commodities were at the centre of the sell-off, as you spoke about there. It's worth noting as well that the gold and silver were in free fall during our session because of the deflationary-like moves we're seeing from some of the US data, and obviously the Chinese data was part and parcel of that yesterday as well. So gold and silver were obviously trounced, and the psychological damage done to the gold market and the precious metal complex is really quite staggering at the moment. And I think the buyers, of which the physical buyers will be the Indians and the Chinese, will want to see that smoothed out before they really get back involved in this. It was about getting back into bonds. We saw US Treasuries down about 4 basis points, which wasn't a massive move, but you know, they're at the lowest levels for quite some time as well. In fact, I think there was about 7 stocks on the S&P which I think rallied last night, and they were because of corporate issues. So, all in all, I mean, you can look at some of the US data as well. The New York Empire manufacturing numbers were slightly weaker. The housing sentiment numbers were slightly weaker. You can look at some of the comments from Mario Draghi, who basically put the onus back on the governments to try and reform rather than take away from the monetary policy side of things, put less emphasis on monetary policy. It really was. It was about buying the yen, it was about buying US dollars, and it was about buying treasuries and selling stocks. It was a risk-off move in its purity, and you know, I think sentiment is quite weak right now.
And also the VIX moving from about 15 up to 17. I want to ask you more about the gold price and the falls we saw there. This was ahead of what we saw in Boston. Were you surprised we didn't see any buying back into gold in reaction to those explosions and some speculation surrounding terrorism? It is a safe haven after all, and it was down 10%.
Yeah, well, I think you'd be looking at other safe havens, to be honest, Kate. I mean, it sometimes has a hat as a safe haven, sometimes it doesn't. It hasn't really been reacting well as a safe haven for some time, to be honest. You know, if you wanted to have a store of wealth, you're just not going to buy gold when it's in absolute free fall. I mean, you know, last couple of days we've seen it trade 1564 down to 1335. I mean, it's a $200 move. You're going to look at US Treasuries. You're going to look back at the US dollar, although it's been trading as an investment asset. You're going to be looking at Japanese yen, and clearly these risk-off moves are going to have seem to have more short covering power than than going along with what the Bank of Japan have been doing. So. I'll be looking at those side of things rather than gold. I think we have got a massive capitulation of longs. Everyone's jumped ship at the same time. I don't expect to see another leg down anytime soon in the gold price. Yeah, if gold's one of those things where you have a big move like this and then everyone try and pinpoint one reason behind it. There's just a lot of different reasons behind what we're going. We're seeing deflationary moves in other commodities, which is causing a risk-off move in gold because of the lesser risk of inflation forces going longer term. You've obviously seen big reports that Cyprus may have to sell some of its gold holdings to pay any losses on through the ELA, through the ECB. Mario Draghi talked about that. That's have ramifications. People are suggesting other European nations with big gold holdings may have to sell as well. And of course, many of the big investment banks have been putting out some big bearish broker calls recently. So I think all those different factors culminated in one just massive risk-off move. I personally think the capitulation's done. I don't think we can expect to see a huge amount of downside from here. And I'm just waiting for the physical buyers because gold's just got a lot cheaper. But we need to see that price smooth out, the volatility subside, and then I think the Indians and the Chinese will be probably looking to come back in.
Yeah, but not come back to the levels we were prior to these past 2 days?
No way. No way. No way. I mean, we're not going to see those sort of moves. I mean, we can see a bit of a move upside. I wouldn't doubt that one bit. But yeah, the fundamentals have changed now. I mean, if you look at things like the 5-year break-evens in the US, which is the difference between the bond market and Treasury-inflated protection securities, which basically is the bond market's way of measuring inflation. You know, that's dropped from something like 2.4%. A month or so ago, down to about 2% at the moment. So inflation hasn't, you're not seeing deflation in the markets, but clearly you're seeing much lower inflation. expectations coming through. That's not going to be good for gold. Obviously, people are talking about the end of the gold cycle as well. We've seen a lot of technical breakdown in the gold price, trading through 1522, which has been a floor in the gold price for quite some time. I just don't see any reason to be, seeing it come back up to those 1600 levels anytime soon. You might see a bit of physical buying coming through, and I think that's where you're going to get the big upside. But certainly, you wouldn't be looking for any. I personally, at least in the short term, you're not going to see it snap back to those kind of levels again.
Chris, we're waiting to take the viewers live to Washington, where we're going to hopefully hear shortly from the US President in reaction to those explosions in Boston. In the meantime, can I ask you for your opening calls today, what you're expecting from the market after those steep falls in commodity prices overnight?
Yeah, well, first of all, we'll get the market opening around 4,900, so it's going to be a pretty risk-off day, down about 1.2%. Of course, we're going to look at Newcrest today. 1683 is the ADR. That's down 6% at the moment. I mean, we got down to, what, 1645 in October 2008, and the gold price was trading around $700 at the time. Newcrest off that pivot had about 120% rally from there, so that's going to be the level we're looking at today. BHP's ADR 31.46, so that's going to be down over 2%. Copper had a big move as well on the day, but hasn't actually fallen a significant amount from where we were at 2 o'clock. We've got to remember, a lot of these moves in commodities were down pretty hard when we went down yesterday, so they were being priced to a degree into our market as well. Banks will be interesting. Hopefully we're going to see some moves back into some of the dividend play, or at least they're going to outperform. I still expect them to be down on the day. And I think there's going to be a lot to look forward to tonight, Kate, to be honest. We've got Janet Yellen and Bill Dudley speaking today. Big doves. Hopefully they can put some sentiment back in there, because the Fed and the ECB puts and the Bank of Japan puts still firmly in the market, and hopefully they can come out with some dovish comments which will support some of these assets in tonight.
Chris, have you had a chance to take a look at Rio Tinto ahead of this production report that it's going to release later this afternoon? I know that a lot of seasonality comes into this one. It's had some pretty bad weather to deal with.
Yeah, I haven't actually looked at the numbers today. I think my colleague Evan will probably be looking at that at 10 o'clock, so maybe he'll be able to throw some light on the actual individual numbers as well. Like you say, the seasonality has been something that a lot of the miners will be touching on at the moment.
I'd have to leave you there and take the viewers live to Washington.